I know some people may say, "Well, I don't make enough. There's still bills." And sometimes you got to just chalk it up and say, "Look, I can pay what I can pay." And then you put the next thing at the top of the list next month. Or you find ways to earn additional income. But I think you've got to do something to ensure that your lifestyle isn't exceeding what your capabilities are.
Yeah,
So,
I think the good thing about what you just said is that if you see that lifestyle is creeping or that you don't have enough to pay and you're using credit cards, then this is a bigger issue and you need to
yep,
get your income up. That
yep.
if we can do that, if we can come to that realization, we need to reorient our life and how we're doing life so that we can meet all of our needs without using credit. Welcome. This is For Better and Worth.
The podcast where we don't believe you have to sacrifice your relationship while you grow and build your net worth.
We are your hosts.
I'm Chris.
And I'm Erica Young, and we're so glad you're joining us today.
All right, y'all, let's get into it.
The For Better and Worth podcast is sponsored by American Heritage Credit Union, a not-for-profit credit union that helps you take control of your financial future.
As a member of American Heritage, you're an owner. You'll be charged fewer fees, earn more in the form of dividends on your account, and have access to lower rates on loans.
Whether your goal is to save for a down payment on a home, create an emergency fund, or build for the retirement you've always dreamed of, American Heritage has the products, resources, and solutions you need.
After all, American Heritage is for the people, not for profit. So to learn more, go to ahcu.co/for better and worth. Hey, babe, what's going on with you today?
Hey, I'm glad to be back in the studio with you.
Yeah, so am I. It's always fun to just get down here and press record and, talk about things that are part of our lives and talk about things that are part of your lives too.
Yes. So, did anything significant, fun, interesting happen today for you?
Let me think. I had some calls and some meetings, but it's pretty status quo today.
Sounds boring. Sounds
Yeah,
boring. I'm
hey.
just saying.
It is what it is.
Well, same, but
Right. Boring times two.
yes, but
But
productive.
productive, but every day is different, So
Yeah.
it's all good.
So today we're going to talk about my absolute least favorite subject.
This should be an interesting conversation between
Yes.
us. So it's been a long time coming to have this combo.
Yeah, I have strong feelings
Yes, you do.
and unpopular beliefs around this topic. And so,
Ooh-wee.
and I'm okay with it.
I
I'm
wonder-
good.
I wonder what the people gonna think.
I am in the minority on
Yes.
this point of view, and that is
Yes.
okay. And I will continue to be firm on that as well.
So set it up for us. What are we gonna talk about today?
Credit cards, to swipe or not to swipe?
Ooh-wee.
That is the question.
People are already thinking, don't mess with my credit card.
Don't you take away my credit cards. What you gonna say about my credit cards? But yes, that is the question of the hour.
So I've got a question for you before we jump into this, but just tell me, what is it like? What's your top thing about credit cards that you just don't like or aren't fond of?
Oh, it sucks people in, very deceptive, and people don't fully understand the ramifications of their behaviors and how many different aspects of their financial life that it affects. So
You had that like queued up.
I promise you, honey, I've been working with people one on one for a long time, and I've seen a lot of things. And credit card usage, it can't eclipse student loans in terms of the amount. But in terms of how it can be detrimental to financial lives, I think it is far and widespread. And so I have very strong opinions about it.
A lot of I think a lot of the opinions that you have, I share some of them, but we may differ in some of the view on how we view credit cards, but let's start talking about it. So when you think about credit cards, just talk about some of the common like misperceptions that people have about using credit cards. What would you say? Then I can follow that up.
The very first thing that I'll say is people use credit cards for emergencies. They don't have an emergency fund,
Yes.
and the credit card is used for emergencies. So while the practice may not be inherently wrong, the challenge is when you don't have an emergency fund. So for instance, you have a car repair that is $500 unexpected, you didn't plan for it, and you put it on a credit card, and then you don't have a savings to pay it off, right? So you end up for a season having to pay interest on that credit card because you were ill prepared for an emergency. So that is a small example, pretty typical. And then we begin to see that credit card as something we can use when we just desire to do something and we just don't have our fail-safe backup plan. And that is one of the main things that is a challenge, is not having an emergency fund.
Yeah, I think that's a very good point that you make because in lieu of an emergency fund, they basically use that as their emergency fund, their backup to them. But I also think that a lot of people use credit cards to bridge their lifestyle
Oh, yes. Okay. Yes. Say more.
because you have a budget and you have a certain income, so you can only spend so much, and that with that income you have to pay food, clothing, shelter, transportation, entertainment, miscellaneous. You've got all that stuff. But I sometimes think that people will, you know, extend lifestyle
Sure.
and use credit cards to fund it. And it's not emergency related. It's like, okay, well, this is lifestyle. So now you're paying for lifestyle on a credit card every month. And then that every month turns into years. And then you can't even look back and know what you spent money on that credit card that you may still be paying for.
And that happens when you realize your checking account doesn't have the amount of money needed for the thing you want to purchase.
Yeah.
So, even just recently, I had a client who they came back after 30 days and said, we have a credit card balance of, nearly $2,000. And in that were things that didn't fit into the budget or weren't planned for in the budget. And
They were
so,
funding lifestyle
yes,
with the credit card.
and not exhibiting delayed gratification. Because the other part of this is the question you ask yourself: should you wait until you have the cash to pay for it, right? And
Look, if you don't like this, just say ouch.
listen. So again, this is my soapbox. And I get heated and I'm going to dig my heels in the sand, and it's fine because it's really hard.
Right. I laugh because there are some instances where I say there could be positive credit card usage as well.
Okay, let's go
And
there.
so, like, just for the record, I have a credit card for work and I have a personal credit card,
Bum bum bum.
which is like tied to like Marriott, because I travel and, I need to get my nights, keep my platinum status, which I've already got lifetime, but I really only use that card when we're doing, big purchases like travel or, we're buying a large item, for our house or just large purchases in general. I tend to put it on the credit card. Or if I'm buying something online, sometimes I'll default to the card just because I feel like some of the protections that are there, it doesn't put my money at risk.
Mm-hmm.
And so I really have limited situations where I will use my personal credit card because I tend to think that people overspend, people don't track it, people don't pay attention. Then the next thing you know, they didn't pay the bill at the end of the month because I don't have a card that I run a balance on. If I put a purchase on it, as soon as it shows up, I pay it off.
Yeah.
And sometimes I've actually known how much it was, and I made a payment for that amount before it even showed up.
Yeah.
So when it showed up, that credit and that debit hit, and it was zero.
So the biggest difference with your credit card usage and what most people don't do is that we've already planned for whatever that purchase is.
Yes.
It's either in the budget or it is in that, whatever it is. We've planned. It is not an unexpected expense in any way, shape, or form. And we've had a conversation. Now, I do think that for transparency, we have to go back to when you got this card.
Okay. All right.
Because that was...
I feel like she's about to put me on Front Street.
No.
People.
Because, and I'm putting my stuff out here.
Okay.
Because the truth of the matter is that everything in the Young household isn't 100% like agreement. Like So do you remember how that happened that you got the card to begin with? Because I honestly, I don't remember how you first decided you wanted it.
I don't even remember now, but it sounds as though it sounds like you remember. So tell the story, and I'm sure it will prompt memory from me so I can correct the story.
Oh, wow. No, so you did mention that this was tied to Marriott Rewards. And yes, you are a frequent traveler for work. And this particular card gives you a certain amount of points so that you can get an additional couple of nights stay per year, et cetera, et cetera.
Yeah, it's just some. I mean, it gave me nights.
Yeah,
helped me hit status and stuff.
So
plus we got free stays and
right.
There were some benefits from it.
So everybody has their benefits that they think are worth the credit card usage.
There's ways to rationalize it.
Yes.
Yep.
But you wanted to get this car, and I'm not sure if we had a conversation or how it was prior to, but I do remember that you were like, you put my information on it so I could be an authorized user. And I was like, dude, I don't want that.
Yeah.
I don't want, and here's why. The only reason why is because I'm a financial coach. I'm a financial educator, and I really want to be above board.
Yeah, you want to operate in integrity.
Exactly. And so I felt like, no, I do not want, nor do I need a credit card. It doesn't have to be in my name. I don't need any of that.
And this is us being transparent with people to know how we function, because I even remember that when you said that, I said, okay, I'll take you off. And I actually canceled that card. And I got a different card, and I made an adjustment too, because I got a card that had no annual fee.
Mm-hmm.
I still received the benefits that I wanted to receive, and I didn't put you on the card.
Yeah.
And so I was like, well, I'm the worst credit card user for credit card companies. They don't want me because now I don't pay an annual fee, and I still get the benefit that I want, and I have the convenience to use it.
And you don't pay interest.
Right. When I want to use it for purchases that I want to make that I've already planned for. So it's all about being a convenience user. So banks are totally like, you're not the person we want. I'm like, that's okay,
But you are very bankable, right? Because of those consistent positive behaviors with money. Like they know because of your habits that you're going to pay it off and you're not going to be a problem.
Yeah, I won't default on it or things like that.
So that's, but in the beginning I was like, I do not want this. And there was lots of tension. I think for a while, if you wanted to use it, I didn't want to have the conversation. I feel like this is probably the only time or the only money conversation where tension was consistent for a
Yeah,
while.
because you have such a strong view about credit cards in general.
Mm-hmm.
It was a point of contention for us, and I think it was something that we had to talk about because I had to understand your feeling about it, and you had to understand my feeling about it. And though we didn't always agree, we could come to an agreement.
Mm-hmm.
And I think in relationships, that's such an important thing that you have to do because you're not going to see every single thing the same, but you have to give people space to explain, well, this is how I feel about it, and this is how you feel about it. Now, let's find a point of agreement, a point of inflection where we can say, hey, we agree on this and we can move forward so it doesn't become something that is a stumbling block that
Right.
becomes a much bigger issue.
Well, and so the one thing, the two things that I think were really important here were you respected the fact that I didn't want my name on it,
Yeah.
and you made that change, and you, so that I feel like you heard me in that moment. And then when you wanted to have it, like it was really important to you, I realized that. I was like, oh, okay, so this is actually really important to him. And I had to let go
Yeah.
of that being a need for you because I know you're responsible. I don't have to question that. That was never the issue. It was me feeling like what you desired bumped up against what I desired.
And I think because we are big supporters of the credit union, we think that's a great way to bank. And we didn't have credit cards and we use debit cards, but there are some parameters sometimes with, spending limits and daily allotments, things like that with some credit unions that the card helped me bypass that sometimes.
Yeah.
Because if we were going on a family vacation and it would exceed the limit per day, then I'd have to call the credit union and say, hey, I'm making a purchase. Can you extend it? Which is not a bad thing because it does give accountability. So you're just not out going, like going crazy. But I could just instead just, make a purchase and not have to worry about it or go through it. But I think it's important to hear one another. And we have people that we know, they put everything on their credit cards.
Well, and it scares me because you're most of the time, if it's just normal, everyday, miscellaneous, discretionary expenses, you're going to spend upwards of 12 to 18% more because you're not feeling that
Right.
purchase. And that is not wise.
I think that's why a lot of times I will still try and use cash because cash just registers differently. And if I know I've got like, $60, $80 in my pocket and I have to use cash and tap into that, sometimes I'll say, well, you know what, it's not worth it. I don't see value in that. And I may choose not to buy something because I have to depart with the cash.
Mm-hmm.
Whereas I go to Starbucks and I'm like, yeah, let me have whatever and whatever. And then they're like, $2,000. And I'm like, oh, okay, here, boom, just pay for it. That's what it feels like sometimes.
Did you just say $2,000 at Starbucks?
I'm just saying that's what it feels like.
You
get a coffee and something and it's like $19.
Well,
But you know what? I'm exaggerating, but it feels like that sometimes.
yeah.
But if I was there and I had to pull a 20 out and I knew I wasn't getting a lot of change back, I'm
Yeah.
like, wait a minute.
Maybe
I'm
I
gonna
don't
go
need
home.
that.
I said, I'm gonna go home and I'm gonna get the Keurig and you make some coffee at home. And it just makes me make different choices sometimes.
Yeah, yeah.
So
Yeah, it's funny how like you definitely use cash even more than I do. Like that is a way of life for you on a normal basis. Like every day on or every month, that is a habit for you to make sure that you have some
yeah.
cash in hand. I think that's important. I think a
But
lot of people
that's
don't
one
do
of my
that.
that's one of my financial strategies.
Yeah.
And so I think people have to employ strategies that work for them. Because when you talk about taking a journey from, being in debt to a debt-free journey to accumulating wealth to changing your generational tree, you have got to have some financial tactics and strategies and tools that you put in place in order to accomplish those goals because they won't happen on their own. And
Yeah.
that's I think one of the tactics that I utilize to make sure that from a monthly basis, I stay on track with the budget because I hardly ever use my debit card
Yeah.
or my credit card in a month on a month to month basis.
Yeah.
I typically tap into, the cash that I have in my pocket. And that way I don't have to go into the account because I've already given,
Yeah.
in accounting for what I'm going to spend.
So, do you care about the positive or negative impact of credit card usage on your credit score?
I haven't actually worried about my credit score in many years because we've been out of debt. We didn't have a lot of things that were helping us to build our credit score, but I guess by default I've got great credit anyway because we've had a home, so we paid a mortgage, and I've had a company credit card, and that's based on my credit history, and that's paid regularly. But I think a lot of people put a lot of stock
Mm-hmm.
in their credit score,
Yes.
and I think sometimes it's overhyped. Like, okay, if you have a 700-800 credit score, it's important if you are in a phase where you need to borrow money. Okay, so don't mistake what I'm saying. Like, if you still have to buy cars, get a loan, buy a home, credit scores are important. But I think once you evolve and you go from here to here to here, credit scores in my mind can become less important as you get to different phases.
Yeah.
So I think in the early phases, if you do things consistently, you just pay things on time, you can build your credit and your credit score without using some of those credit repair places and things like that.
For
So
sure. For sure. I think I'm going to echo everything you said that when you're still in debt and don't have an emergency fund, it is likely you need to keep your score intact, work on improving that score, and potentially keep a card, if you have one, in good standing until you have a solid emergency fund. I think the mistake that can be made is to get rid of all of your credit cards, and then you don't have any money in savings. And then when an emergency really does strike, because you're just starting out your journey, then you've trapped yourself. You don't have anywhere to go, and then what do? You can't even take care of the emergency. So I don't think that that's wisdom. And I think that for a lot of people, having a decent credit score can help them reduce, like you
interest,
can refinance your auto
yep,
loans. This is how you can qualify for an actual mortgage with a decent rate, because you are not, most people, I don't even know what the percentage is. I'm going to say 90+% of the people are not about to go buy a house with cash, period.
yeah,
We're not doing that.
yeah, we didn't do it. So
And a lot of people are also, believe it or not, going to get a vehicle with cash, especially if you're already in debt. You don't have the cash. So you might have to make sure that your score is good or decent in order for you to be able to qualify for some of
and
these
look,
things.
I know this is contrary to the popular belief because I mean, I scroll through TikTok and there's so many financial gurus and geniuses on there
Uh-oh,
telling
wait.
you
You
everything
said
to do.
genius on TikTok.
Right. And they're like, look, don't pay your house off, get a loan and, pay yourself or get another property. And I was like, boy, that is a recipe for disaster. I remember the 2008 housing crash and people had multiple properties and they got themselves in a lot of trouble.
Mm-hmm.
And so, yes, I do think you can build wealth through property ownership, 100%. But I think you have to be prudent. You got to be wise. You got to be smart. And it's okay, to not do things the way that everybody else does them, because your journey is your journey. And what it takes for you to get there may not be the same thing that it took for someone else to get there.
Yeah.
And it doesn't have to be perfect, but you have to be committed to it.
Yeah, absolutely. And I would add that your FICO score, your credit score is a measure of how responsible you have been with money. How can someone trust you with a loan or debt of some sort and you're going to pay it back? And it is an I love debt score because the more variety you have and on-time payments you have, the better your score. So if you only have a mortgage, which, pretty much is our situation, and we're just kind of stagnant. There's no new auto loans, no student loans, no, revolving credit card debt that we're carrying. None of that is going on. And so the score doesn't move very much, right? And so I think that you have to get okay with the fact that, I'm never going to have a perfect score, first of all. And when we don't have a mortgage, it is likely I'll have a zero. It'll be incalculable. And so I think that we have to really consider, are we chasing this score, and what are we chasing it for?
It's interesting you talk about chasing the score, because I feel like so many people are defined by their score too.
Woo!
Like you have a high score, you like, oh, I've got a 750 credit score, like, because
No.
you hear jokes about, in relationships, make sure they got good credit.
Right.
You don't want somebody with bad credit, but if you have a low credit score, maybe you made some poor decisions in your past. That's what got you there, but you can turn that around.
Absolutely.
And it doesn't define who you are. So I'm speaking to you 400 credit scores out
Lord,
there.
he said 400.
Well, I guess that's real low.
That's real low. That's you did nothing. Okay.
Yeah, well, I'm talking to you 550 credit scores out there. That doesn't define who you are.
It doesn't.
Because just like you made a few mistakes, with a series of correct steps, that can be a 650, borderlining 700. But it takes work. It takes consistency, and it takes some patience, because people want to just go from A to B, like, instantly, and instant isn't how things happen. And to get out of debt, it didn't take you overnight to get in debt. It took a while to get pretty deep in debt. So it may take a while to get out of it, and it may take a while to build that credit score and repair it. But I say just use it for what you needed in that time, because everybody goes through phases, like I said.
Yeah.
And you go from one phase to the next. And what the tools that were required, I learned this about life. The tools that were required in one phase of your life may not be required in the next phase of life.
Yeah.
And you may be trying to use those same tools in this next phase of life that could be detrimental to your progress, because you need new and different tools. And so credit scores are not going to serve the same purpose over the course of your life, from being, in your accumulation phase, to when you are entering your financially free phase.
Yeah. So I want to just say one thing that I think is really important for people to understand about credit cards, is that you have to, the responsible use of credit is really vitally important. And so if you want to build your score, I'm gonna give you this real little tip. This is the tip.
I thought I was listening to music right there for a second. You said the use of credit. I was like, yep.
You were in Amen corner over here?
Yeah, I was just, I was giving you the head
bob.
The head nod, like, yep.
Hey. So
that's just, that's just my way of showing support.
Well, I appreciate that, babe.
When people talking and then they saying stuff, you like in the audience just shaking your head like, yeah. Yeah.
You in my audience shaking your head?
Yeah, I'm just like, yeah. That was good. Yep.
So let me tell you what's good. Here's what's good. Is, believe it or not, when you have your credit limit on your actual credit card, you only want to spend like 30% of it and then pay it off. Like, that's it. So if your limit is $1,000, don't spend more than $300, because they're going to see you as a risk. And if you
say you go right up to the line,
yes,
then you come back down.
Right. And so then they're going to say, hold on. And that's when scores drop. Scores drop when you get close to the limit, or you're above a certain threshold. That is when scores drop. So keep below that 30%. if you do use a card. And if you're looking to build your credit, honestly, I have told my clients this. Now, I don't have to do these things because my credit is at a stable place. But if you're looking to improve your score, put your gas for your vehicle on your credit card and pay it off every month, because in the budget you put $200 for gas. You know you have the money available, and then just pay it off on your credit card. So if you're looking to build credit, keep it beneath that 30%, and then just put a household item that is normal
Or what
on
about
it.
like just getting a prepaid credit card?
That works as well, but I will say, if you already have a credit card,
You saying
use
just
what you
use
got.
that?
For a prepaid card, I would say for people starting out. That's
Okay.
something that
Okay.
I honestly would
It's a
say.
way to not get into having the big credit card limits
And if
and
you don't, and I'll be
debt
honest,
and
if you don't trust yourself,
right.
a prepaid card might work too. So I think that builds discipline. So that's a thing that I usually would say to young people if they're looking to build credit. That's a way to do that. But there's other ways that people can build credit too. I
And
mean,
that's what we were telling our daughter to consider a prepaid card
yeah,
to build credit. But she's building her credit by paying her rent on time
that
and
part.
paying her bills and showing consistent history. So that's going to help her build credit. But I think for some people who are currently in credit card debt, who are looking to get out of it, some of the things that I would tell them to do is, one, naturally stop spending.
Yes.
Stop spending, stop accruing additional debt on that card. I might even consider like consolidating to a singular card so that they don't have a bunch of cards to tap into. So that
If they
limits,
can.
yeah, if they can, because you still got to qualify for it. And if you have balances on, three or four cards to get them to one, you still got to qualify for that.
Mm-hmm.
But I think it just helps you to stop the bleeding,
Yeah.
because you can't repair if you're just still bleeding everywhere.
Yeah.
So you got to stop the spending. And then you got to just put a plan in place to begin to eliminate that debt.
Mm.
And you got to stick to it.
Yeah.
Because people will do things and they'll stick to it for a season. Then they're like, you know what? Nordstrom's year-end sale is going on. These deals are so good. I saw these shoes. You know what? Let me go ahead and get it when it's not in the budget, when you haven't, planned for it. And next thing you know, you're pulling that plastic card out,
Right.
using that card, and it's keeping you in the place that you're at instead of helping you get to the place that you want to go to.
There you go. Perfect. So is that your make it worth it?
Well, I don't know. I don't know. What's your make it worth it? Come back to me.
Okay. So my make it worth it is really know your tipping point between when are you, when is your credit card usage helpful versus harmful, right? So is it helping you get someplace? Meaning you are building your credit, or you are really trying to be a responsible user, etc. Or is it harmful because of what you're spending it on and you don't have an emergency fund? So I think you have to think
Yeah.
about, is it helpful or harmful? And I think the biggest tip that I would leave people with is, if you don't have a plan for what you're putting on that credit card, you don't need to use it.
All right. That's a good make it worth it.
What about
So,
you, babe?
Well, I'm going to go back to the beginning and I'm going to say, don't fund additional lifestyle with your credit card.
Yeah.
Because if you don't fund additional lifestyle, it's going to force you to have some discipline about what you choose to spend money on. And if you stick to that, you can accomplish the goal and hit the plan better than if you're just extending beyond. And I know some people may say, well, I don't make enough, there's still bills. And sometimes you got to just chalk it up and say, look, I can pay what I can pay. And then you put the next thing at the top of the list next month. Or you find ways to earn additional income. But I think you've got to do something to ensure that your lifestyle isn't exceeding what your capabilities are.
Yeah.
So,
I think the good thing about what you just said is that if you see that lifestyle is creeping, or that you don't have enough to pay and you're using credit cards, then this is a bigger issue and you need to
Yep.
get your income up. That
Yep.
if we can do that, if we can come to that realization, we need to reorient our life and how we're doing life so that we can meet all of our needs without using credit. Let's go.
Look, I hope that people take this and make it work for them. You know, though we see things a little differently, we try and make it work for us.
Yep.
And so you do what works for you, but be committed to it, and work the plan to get to where you need to get to. So I enjoyed this conversation. So
Yeah, this was so good, honey.
well, look, until next time,
We're out.
thank you for spending some of your time with us today.
We appreciate all of your support. So be sure to subscribe, rate, and review us wherever you listen to this podcast.
You can find us on Instagram at For Better and Worth.
And sign up to receive our free guide, The 7 Reasons Your Money Relationship Isn't Working with Your Partner, on forbetterandworth.com.
Until next time, we're out of here.